10:49 Eastern Standard Time. It is Saturday, July 19th, 2025. And welcome to War Notes, you all. There's a lot going on, right? Isn't it? Indeed, a lot going on everywhere across the framework of this country and across the globe. There is something going on. Today, it's about Netflix stock drama. And it has to do with war. Why? Because you start to see the problems of war and what it's causing, and the inflation and things, to the point to where people can't even afford the small luxuries. I would say it's a small luxury. Um, well, big luxury if you really want to look at it another picture. You say, well, that's a lot of luxury to be able to have Netflix, because Netflix is quite expensive right now. But anyways, we're going to get into all of that right now. Just stay tuned in. There is no visuals, and we are just voice here. This is an old school radio program. Respect is required. There are no slurs, no harassment permitted in the program, and anyone crossing the line will be blocked and reported. So let's begin. Again, good morning, listeners. Welcome to War Notes. We are live right now. And again, we are bringing you breaking updates on Netflix and why Wall Street's reacting. Netflix stock crashed over 5% today following growth-fueled earnings that fell short of investor expectation. Shares closed around 1,209, down from 52-week high of 1,341, and now nearly 10% below that peak. The surge in revenue, up 16% to 11.8 billion, and EPS at $7.19, came largely thanks to a weaker US dollar, not domestic, subscriber gains. That kind of growth isn't what pushes a stock higher. Investors are also nervous because, and of course, I'm trying my best to speak in language that you all understand, because some people are not familiar with stock market and all of those things. I'm not familiar with it myself as well, but I like to pass the information. And other people that are familiar with the stock market, they'll probably understand the language of our factual news to the best of its ability, right? Because they know about stocks. So anyways, investors are also nervous right now because Netflix has stopped reporting subscriber numbers, shifting the focus from user growth to revenue and profit. And that makes it hard to gauge real audience demand, or gauge real audience demand. And with their stock trading at 44 times the earnings, markets expect flawless execution. Now, analysts remain cautiously optimistic. 16 firms have raised price targets. So Key Bank or BANC, Key Bank, to 1,390. Pivotal Research, the 1,600, citing strong upcoming content like Stranger Things. So that's going to bring Netflix a lot of money, of course. And so they're calculating all of this, new live sports and high profile movies. Now, yet others are pulling back. So Seaport Research just downgraded the stock, saying most future gains are baked in without new content innovation. Meanwhile, market sentiment is mixed. The Nasdaq hit a record high, but Netflix drop led the S&P and Dow lower. Even with profits beating, investors are eyeing upcoming subscriber trends more than quarterly performance, because with prices of everything, people are not able to afford this. So they're watching this very tightly. So what does this mean for you as my listener right now? Folks who are in the program, welcome. And if you want me to shout out your name, please say hello in the comments, and I will do so once I finish the program here. Thank you all for being here, and God bless to everyone here. So what does this mean for you as a listener and myself? Well, you're going to have to expect higher volatility. Netflix is at a tipping point, and if you look close to the upcoming content slate, like Happy Gilmore 2, Christmas NFL games, international expansion, and sports program, you'll see that there's some changes coming there. Another thing too as well that I would suggest is that you watch subscriber data from competitors. If Netflix isn't growing, markets will punish it again. Keep an eye on the ad-supported tier. Profit margins deepen on monetizing beyond subscriptions, okay? So anywho, that is your quick what, 5 minute briefing? Yeah, indeed. 5 minute. It's your quick 5 minute briefing on, Netflix. But anywho's, Netflix is strong on paper, but expectations are sky high. One misstep and that stock dives. So if you have stocks in Netflix, you might want to keep looking at that and um, you know, keep your eyes peeled. Things are changing on other sides of the ground, but it all affects folks like us at home, because when prices start to raise here, raise there, then small little luxuries start to disappear, and that's just how it is. Anyways, my name is Pavi G, and this is War Notes, and this is old school radio vibes. So if this kept you in the know, please subscribe, share, and be kind. And remember that always here in this program, disrespect won't fly here. There are more updates to come soon, and the replay will be available shortly. Take care and stay alert.